Welcome to our compliance conversations in the midst of COVID-19, brought to you by ILSA and Spot On Insurance. Today we'll be covering diligent searches and export lists related to surplus lines.
Thank you so much, guys, for being here. I think sometimes this is my selfish moment where I get to interact with the community, so I love this time so much. This is going to be a 1-hour session. We will have a 1-hour hard break. The mics have been muted. However, if at the end there is time, we'll unmute the mics and we'll join the conversation. Everyone can join the conversations. You can write your compliance questions in the icon that says Q&A at the bottom of your screens. And if you want to say hello, nice shirt, nice hairstyle, you can put that in the chat.
Okay, our guest panelists are Joanne Delgado's Vice President, Education and Compliance for the Surplus Lines Association of California. And from Mulaney, the Excess Lines Association of New York, we got Brian Persaud, Director of Information Technology, and Eugene Nunziata, Education Communications Director. Welcome, guys.
Retired.
You're never retired.
He can't fit the team.
And from Foundation's Risk Partners, we've got Lorenzo Houston, and we know him very well, Operations Specialist. Lorenzo, welcome. Our ILSA participants are Russ Foster, General Manager at ILSA. From our Surplus Lines Department, we have Rebecca Garcia, Manager, Sherry Grove, Supervisor, and Angie Dyer, Team Leader. Our chat manager is that superstar Joyce King, who is the Quality Assurance Administrator at ILSA.
Real quick, we'll just do this quick because I know a lot of you might be new to these weekly compliance sessions, but one of the things that we've been doing is trying to share resources. We were doing bulletins, just kind of updating everyone what the COVID-19 bulletins that have been released were, but we'll show you where we store those in our newsroom, and we'll also tell you of some other websites where you can find great resources. So Russ, if you'll just show our ILSA newsroom where we have all of the regulatory bulletins, if people aren't familiar with that.
Will do. Welcome, everybody. We have on our corporate website, ilsainc.com, a ton of resources. We have a bunch of folks who are dedicated every day to updating state bulletins. If you go to our website, go to the newsroom, we have those posted in order of most recent, but everything is tagged. So if there's a specific thing you're looking for, if you're looking for COVID-19, you're looking for cybersecurity, which I guess we're going to be talking about in a couple weeks, you click on that, it will take you to all of the relevant postings from the state. And our guys often get these up here before they make it to the state websites that issued the bulletin. So this is a great place to go. And in fact, look there, we got some New York stuff there. Brian, we keeping track of you guys. So make sure you check that out. It's there, it's on the website, it's free to use. It's very, very handy, and it's very timely. Also, if you need to get in touch with any of the regulators, of course, some of these bulletins are about how you get in touch with them right now. But if you need answers to any of your questions on our resource page, we have a contact page where you can click on any of these. And in honor of Brian, we'll hit New York. And there you go. You've got all of the different departments, the Department of Insurance, Department of Revenue, Secretary of State, Stamping Office, the SLA. Also, if they have any special features like a licensee search or a business entity search, those will take you directly to the page that does that. So those are all there. They're very handy. You can bookmark them, use them whenever you like. We just want you to be able to have those resources handy.
And I just wanted to tell you that for our team, 2 other great resources have been the WSIA, which I always say was SIA, but I get in trouble by those folks. But the WSIA.org website, for those of you that are in surplus lines, which I think most of you that are here today are in surplus lines. And the other one on the side of the Secretary of State and the Department of Revenue, if you have that role as well, the AICPA.org is a great resource. So just wanted to share that with you. I'm going to share a little bit of background with you guys on our surplus lines department and its creation. You know, we started ILSA back in '97, And we started out with licensing and Secretary of State filings. And we quickly realized, this was like back 97, 98, we started annual returns. We realized that surplus lines was such a nightmare for brokers. And in 2004, we started our surplus lines department. And it's grown tremendously. So I'm super excited that Rebecca's going to be covering this topic, which is diligent searches and export lists, because this is what we love to talk about in surplus lines. So Joyce, I think you have some questions that you want to start us off with.
I do. And I'll quickly say to the attendees, the focus today is on the diligent searches and the export lists, but all of our panelists today are ready and willing to answer any questions that you may have, even if you have something related to licensing or any other compliance related subjects. So don't hesitate to put in your questions. If we can't get it answered for you today, we'll definitely circle around and get with you offline and provide any help that we can. So I do have some questions that I want to pose to our panelists today. And first of all, I think I want to ask Miss Angie Dyer, would you please explain to us what is a diligent search?
Okay. A diligent search is actually like a good faith effort that a producer or an agency will handle. They contact the insurance carriers who are admitted to see if they will accept that business. And if not, you know, then they can go to the non-admitted market. But all this has to be done prior to placing that business.
Yeah, that's a good point.
Yeah.
Not after. Not after.
Not after.
Not after. Okay, good. Good to know.
Eleni, for those who use our system, Ted and Arleen and everybody listening, we had a little bubble out there. Like, please, this should be before. Help us help you, right, Gene?
Yes.
Yeah.
Oh my gosh.
All right, Eugene Nunciata with Eleni. I'd like to give you one, sir. What is the purpose behind the diligent search requirements?
Okay, so what I'm going to tell you is my responses are New York specific.
Yes.
Other states may have different regulatory criteria, so check with state stamping offices or other states in case what I'm saying to you doesn't agree with whatever state you're from. Okay, so this is general. The two main functions of insurance departments are consumer protection and insurer solvency. And insurer solvency is the most important consumer protection, because when you go to the insurance company with a claim, you want to make sure that they have the money to pay you. So that's, you know, that's very important, that a very important function of the insurance department is to make sure that insurers are solvent. Okay, so it is the position of most insurance departments that licensed insurers get the first opportunity to write the risk. Okay, and this is because insurance departments have regulatory oversight over licensed insurers. They perform rigorous vetting processes before the insurance receive a license with regard to financial solvency and management competency. They approve rating forms, so there's rating form approval, and that kind of gives brokers a safety net if the insurance department already approved the rates and forms. Because in excess line policies, you know, a lot of times when it's manuscripted, the broker actually has to read the policy, and they don't really like to read policies and understand them. So it's kind of a safety net. And there's the guarantee fund. So that's one thing that the insurance department always points out: the difference between the license market and the excess line market is there's a guarantee fund. In New York, the guarantee fund will pay up to $1 million a claim. I'm not sure about in other states. There are other, different amounts that they pay out of the guarantee fund. Insurance companies must follow all of the rules and regulations and are subject to disciplinary actions of the insurance departments. So that's why, insurance departments want the license market to get the first shot at the opportunity, because they have overall regulatory control over the insurance license market. Now, it is the position of the New York Insurance Department that if a broker receives a quote from a licensed company, they must place the insured with a licensed insurer. And I think Joyce might have a question for me on that.
I do actually have one for you, and I can get to that one right now. Here is the question, and I told you I was going to ask this earlier. If I receive a quote from a licensed insurer and a quote from an E&S insurer, which is for a lower premium than the quote that I received from the admitted insurer, can I place the insured with the E&S insurer?
And this is a good question. This is a question I got when I both was at the insurance department and at Laney. This is a question that brokers often ask, but the answer is, unfortunately, no. If you get a quote from a licensed company, it doesn't matter. In New York, it doesn't matter what the fact that the premium is lower. Some states have different rules, but in New York, they say absolutely no. But there is an exception in New York to the insurance department's position that you must place the insured in the licensed market if you receive a quote from the licensed insurer, and that is called superior coverage. So there's a superior coverage exception. If the coverage offered by the E&S carrier is superior to the coverage offered by the licensed insurer, then you could place the coverage with the E&S insurer as long as you get 3 declinations from licensed companies. And the example that the New York State has an opinion, and the example that they gave was defense within limits and defense outside limits of a policy. So defense within limits, it would limit, the amount of legal expenses to pay the claim would be deducted from. So say it's a $100,000 liability policy. If it's $80,000 in legal fees, they subtract that $80,000 from the policy, and you really only have $20,000 to pay the claim. Where if it's defense outside the limits, then that whole $100,000 is what will pay the claim, because the defense, costs are outside of the policy limits. So that's an example of an exception that maybe some people aren't aware of, but that's only in New York. I can't speak for any other state.
Well, it's Eugene, while you were talking, you were sparking a side conversation in my Q&A.
Okay.
Lori Petrosidis and David Thompson, they joined in and said, well, that, Lori said, what if the coverage is not apples to apples? And as soon as she posted that, you were answering that question. That's where you were talking about the superior coverage. And David Thompson both chimed in as well and said, in Florida, you could export if it's better coverage in surplus lines. So it sounds like that is even outside of New York. Real quickly, Joanne, if you don't mind, can you jump in from the California perspective on this?
Sure, and California also has something similar with regard to superior coverage. So if the coverage is uniquely different and better fits the insured's needs, it can be exported to the surplus line market.
Okay.
But you got to make sure it's really superior. You can't just say, yeah, it's superior, because the department's not going to buy that, and usually it'll come to bite, back to bite you, because there'll be a consumer complaint, and, it's your license that'll get, that's in trouble.
And the dominoes begin to fall.
Yes.
Yeah.
All right, excellent. Okay, are we ready to move on to the next one?
Get it.
All right. Sherry Groves, please. Can you explain in a little bit more detail what the diligent search involves?
Absolutely. And are you ready for this? The exact process does vary by state. But not a whole lot. But most commonly, as Eugene and Joanne have already said, most commonly you will get 3 declinations from companies in the admitted market that generally would write that type of insurance if they wrote that risk. And then if you do that, then you can place it in the admitted, in the non-admitted market, in the surplus lines market. The admitted market, for the reasons that Eugene has stated, that's where the states want the insurance to go, if at all possible. But most states on an average require 3 declinations, 3 companies that decline that risk, some more, some less. In some states you are required to upload that information as you are filing that policy with the state. Other states, as long as you keep that on file and have it in case of an audit or have it in case they ask for it, then that is fine. But here at ILSA, our practice is to, to tell our clients, give us that declination, the declining carrier information. That way we have it, and if anything happens, we can help, provide that information. The one area that's different is in Puerto Rico. Puerto Rico has what they call a circulation portal. That is where they put the policy out, and for 5 days, then admitted carriers have the option to pick that up and say, yes, we will write that risk or not. And at the end of that 5 days, if an admitted carrier has not picked it up, then it can also go to the admitted market or go to the non-admitted market as surplus lines.
Awesome. Thank you, Sherry. My knowledge of surplus lines is pretty old. It's been about 10 years since I was really working deeply in the compliance side of that. But I do remember back then, the state that required the most declinations was Ohio, and they wanted 5. Do they still require 5 now?
Yes, I believe so.
Okay. Is that still the highest that you're aware of?
That I'm aware of.
Yeah.
I mean, Ohio is actually one that we do not have to provide that information to the state.
You have to retain it.
But yes, they are, one of the higher ones that require the most declinations.
Okay. We have one question that was submitted. And one of you states, please feel free to jump in on this one. Can an upload of a carrier's underwriting criteria showing ineligibility of a risk suffice as a declaration?
I can offer a little bit of guidance from California because it can sometimes somewhat be a gray area, but the California Diligent Effort Form does provide the opportunity for a broker to actually say, no, I did not get the declinations, and answer a subsequent question on the form that allows them to explain why. And so in most cases, we would see answers particularly, I'm going to say like that one, or other types of market research that a broker has done, number of years of experience in the industry. So California does have a mechanism by which you can state that you have not looked for declinations on a particular risk.
Okay.
Joyce, in New
Yes.
York, that will not apply because there
Okay.
are seven pieces of information that accompanies a declination search, a diligent search for each company. The name of the company, their NAIC code, that reason to believe, who you spoke to, first name, last name. So those things would not be provided in if an underwriting criteria were set up from a company. It wouldn't meet the New York requirements. So
Okay.
long way to say no.
Let me see what they're saying.
And for us, Joyce, in order for us to file with the various states, we have to have that information because it kind of puts a stop at for us. So when we do not have that information, we do reach out to our people, our clients, and ask for that because it's required when you're doing the filing process. Because like Brian said, for New York, if you don't submit that information, they'll kick it back. It means they'll give us a tag. And so we have to provide that information in order for it to be accepted and stamped by New York.
Correct.
Right, you have to
Awesome.
check one of those. You have to check one of those 3 boxes.
Okay.
or why the insurer declined. So if you don't, it's like you said, it's going to get kicked back.
It's going to get kicked back.
And I'm not sure, Brian, would our system allow them to continue without answering those questions?
No.
No.
Actually, you have two choices. If you start on a company, you have to finish the 7 questions, right, wrong, or different. Or you can go back and then skip those companies. So, but once you start a company, you have to finish it.
Right.
Or go back to the previous screens and sort of have a do-over. That makes sense?
Yes.
And usually in New York, I just have to say this, you want to make sure you have that information because it's a long process.
Yes, unfortunately.
You want to have all that information in front of you, so yeah.
But it's the best process.
Yes.
The best process to slow you down.
I know, but sometimes when you're filing in New York, you're kind of like, oh, because I don't like to get any rejections from any state, and when I see an email from New York or any various states, I go, oh no, because we want to do a job, we want to make this easy for everyone and get it processed and accepted, and
this is one of the reasons why we've created because a lot of times in New York, the experience is 80% or so of the transaction that comes through are really coming from a producing broker, not the ex-client broker. They have to go to the wholesaler or the ex-client broker to do the filing because the producing broker cannot do a filing with a laney. You have to have an ex-client license. So a lot of times they're getting downstream this data and it's wrong, it's incorrect, the company name is incomplete. They're like Chubb. I'm like, okay, there was 15 Chubb. Which one did you mean? And so what we have built, we built a free, on a public website, a Part C module that allows them, when they pick a company, it gives the full name and it picks the correct code. So we've done that as part of our process. Some brokers still log in and use the Part C module, but to ease the burdens of what Rebecca was explaining there, we have provided a public access website to the Part C where they can get that information with the latest information that Eleni has in our system.
Awesome. Our attendee did say thank you very much for your responses. That did answer their question, but I have another question already that's been posed in this, and here it is. Can't you just use the same declinations over and over? Oh, Lorenzo.
We know who's guilty. We're not calling any names, Lorenzo. I mean,
no, I would never do that.
Of course.
Well, most states will require, to my knowledge, that you do obtain that each time. I know that there are some states that allow exceptions, specifically for like RPGs. If I'm not mistaken, a lot of states will either bypass the requirement or they'll make you do the diligent search just once for everybody that's a member of that RPG.
Mm-hmm.
So, but to my knowledge, most states will require that you obtain those, you do the diligent search every time you place a risk.
No matter how unreasonable it is.
Yes, a unique diligent search.
Right.
Don't just pencil it in. Is that what you're telling me?
Exactly. Many Part C affidavits in my time.
Yes. If I'm not mistaken, New York assessed pretty hefty fines probably about 2 years ago on an agency that used declinations. Right. Hey, we had used those before, and
right. They used yes, correct. They used the same 3 declinations for the whole year.
Yeah.
And they got a hefty fine.
Yeah.
We got them all on Christmas Day.
And it was in the millions.
Merry Christmas.
I was going to say, come on, guys. What do you mean by hefty?
Oh, gosh, help us.
In the millions will do.
Okay, I'm going to move on to another question. Does every state require a diligent search before a producer can sell the policy on the surplus lines market? And I know we've talked a little bit about this, but we can get a little deeper. Okay.
Well, just right now, we've been doing a lot of research. Last year, we did a chart with New York and helping create a guide. So right now, there's 46 states that require the diligent search. And so there's 5 that do not. And then anytime that could change, so you always got to be keeping up with the rules and regulations.
Sure. Okay. Okay. New York and California, can y'all weigh in on that? You both do require a diligent search, do you not?
Yes.
Yes.
Except for ECP and export list, right, Gene?
Right.
Good.
But we didn't get up to that topic yet.
Yeah, but we will. We will. We will.
So
We're
Brian's
going.
jumping the gun.
We're going there. Are you
I
eager,
need to
Brian?
I need to give the people hope who are listening. It's not all bad. It's not all bad. There's light at the end of the tunnel here.
Okay. Now this is where we start getting into the nitty gritty and maybe even more state specific, but because each state is different, we know that. But what sort of information is required to be collected, and then what do you do with that information?
So I'm going to take that one.
All right.
When you're collecting the information, you need to remember your 3 W's. Who the insurance company is and their NAIC number, and even the individual's name that you spoke with. When did they decline it? That's going to be a vital part of information because every state wants to know that. And why did they decline it? You know, there's several different reasons why it can, many different reasons why it can be declined. Once you have all this information, some states do have forms that need to be completed and submitted with the policies. Some states, you know, they just require you to give the name of the insurance company that you spoke to. You know, they don't want any of the other information. They're pretty simple. But once you have that information and you could submit it all with the state and make sure you keep it on file, you know, for the states that don't require you to submit that with your policy, because they may come back and audit. And if you don't have that information, your audit could go down the drain real quick.
And Rebecca said earlier, I think that Ohio is one of the states that you don't have to submit it, but you should keep it on file. Do you have a recommendation of how many years they should keep it?
Oh, probably 7.
Probably 7.
Yeah.
Yeah, I think 7 is a good rule of thumb.
Yeah.
For any type of, you know, documents like that.
In New York and California, for your purposes, even though it does have to be submitted, what do you think is or do you have a guideline for how many years they should keep this documentation on file?
Sure. Every state does have a retention policy that you can look up. My general recommendation to an agent or broker that's working in multiple states is to use the 7-year rule, because that will satisfy just, you know, every state's requirements. And it's really looking at audit terms and how long you can be audited for.
Okay. So
in California, I believe that's a 7-year term, but it ranges in many states between 4 years and 7 years.
Okay. 7's a good rule.
Yeah,
Sounds good.
I agree with that. And if some policies are like 10 years, then you should obviously keep it for longer, because some of the some policies are, you know, are longer.
Okay.
That's a great point. It should really go it should be kept after the policy expires for that number of years. So if you're writing a long-term or a long-tailed policy, you need to keep it longer. Jean is absolutely right.
And we have a comment from one of our attendees that says, my company requires that a diligent search be completed on everything, since they will confuse the states that don't require forms. If the state doesn't provide a form, we supply a generic form, and I agree with the 7-year retention.
Yes, and also with that, if they keep it on file, you know, states change every single day. So you never know when one state will decide that they're not going to require it anymore and the next one does require it. So it's always best just to go ahead and do the generic.
Right, right. Lori, thank you for that input.
Hey, Joyce, before we go to our next question, I think this would be a great time if you will just share I know a lot of people are new that are here in this compliance session. This is surplus lines. And as I'm hearing of all the different things and all the states being different, I think this would be a great time to share what we launched April 1st, because this is something that's for surplus lines processors.
And Russ, you're on mute, because we always forget you.
Yeah. And I'm sorry, Russ, that I'm just kind of like throwing this at you at the last minute.
She threw me under the bus. So you want to talk about Kat, right?
Yeah.
That's why I don't let her drive.
All right, I'm gonna share the screen here and show you guys what Arleen is talking about. Back in April, we launched a tax calculator tool on steroids. So we had been getting requests from our clients forever for something to help them to calculate the taxes, break them out, see what they needed to have on hand to be able to send to the state. So we started working on this a couple of years back, and we launched it in April. This is actually, if you want to try this, it is free for 60 days because of everything that's going on. We figured we'll throw this out there and let people try it out. We've actually run this by Eleni. Brian's had a look at have you been in the guts of it yet, Brian?
I haven't had a chance to do that. I've been so busy, but I promise I will one of these days.
Well, we wanted some feedback from the different states. Kansas was really impressed with it. The guys at Eleni, of course, we get along great with them. They said they would help us to tweak it, but we think it's a great product. If you go to the ILSA website, click on resources, that link will be right there. But it is amazing. It will give you not only your tax information, but it will give you all of the links to all the forms. Again, there's a background link to all of the stamping offices. There's just tons and tons of information in there to help you work through the process. If you need to know if you want to know how to pay the state the taxes, it's going to tell you that. There's just a lot of stuff in there. We think it's a great product. We've gotten tons of good feedback about it. And we think that this is something that no broker should be without. So
thank you, Russ.
if you want to know more, just go to the website, click on the free trial, and it will get you set up. Also, we have a video. I haven't had much luck showing this video across a Zoom meeting, so I don't think I better do that. But so that is CAT, Calculator and Tax Tool.
Thank you, Russ.
You're welcome.
Okay. Are there any instances where a producer can be exempt from the diligent search requirement? Here's what everybody wants to hear. This is where we want to go.
Yes, there is. One big instance is if it is on the state export list. These are coverages that the state has gathered and known that that there aren't admitted carriers that cover these types of risks, so they put them on an export list. And if it is on the export list in most states, it is exempt from a diligent search. Some of those coverages can be, cyber liability, amusement parks, hazardous waste, things like that. And again, it is, double check that export list because they do change, and things are added, some things are taken away. But again, just be sure that you check the export list. Some things, again, and some things that are on there that are not on there today could be on there tomorrow. It just depends on, on the state and on the type of risk it is. But that is one way. And another couple of ways, and I think we may get into this a little bit later, is exempt commercial purchasers and independently procured insurance. Those are also either exempt or it is up to the insured themselves.
Okay. New York and California, if you'd like to weigh in on that, please feel free. And then I have a question from one of our attendees as well.
I have a comment on that.
Yes.
Yeah, I've had to do a report, and Jean, you know this. We're in New York, while we create these export lists or we create the situations for ECPs, that is large. In some cases, I did an analysis for 2019, and we had about 40-something thousand transactions that were potentially could have been on the export list. But about 10 to 50%, 10,000 transactions were not on the export list that could have been or should have been on the export list. And there's multiple reasons for that, and Jean can probably jump into some of the reasons. But we're finding in New York that there is an underutilization of the export list situation. So, and I know, sometimes Jean, you can jump in and explain why the brokers, MGAs, and the wholesalers are terrified to tell the producing broker, don't provide, a declination for this. Because go ahead, Jean, take it away.
Yeah, one of the reasons that we hear from wholesale brokers, which makes absolutely no sense, is they feel that if they tell producing brokers that certain risks are on the export list, that they won't get declinations for any risks, even those that are not on the export list, which is like, I mean, you as the wholesale broker should be educating your producing broker clients as to what risks are on the export list and what risks are not. And I mean, the ironic thing is that when we want to get new risks put on the export list, we have to get these producing brokers to actually testify, because they're the ones who know which, which companies are, not, willing to write those risks more than the wholesale excess line broker. So it's kind of, it's kind of strange that the very people that need to use it are being excluded because the wholesale excess line brokers feel that the producing brokers are somehow not bright enough to use only those risks that are on the export list. It's kind of like strange to me. I just never understood the reasoning behind wholesale brokers using that as that excuse as to not letting producing brokers know about export list coverages.
Also, in one case, we had a broker who thought that you don't have to do the export list. I don't need to do a Part C. In translation, that's what they heard. Oh, I don't need to do a Part C affidavit. I'm like, really? How'd you get from not providing a declining company to not providing a Part C? I'm like, hello?
I mean, that was also an excess line broker. Many years ago, there was one of the broker organizations had misinformed brokers saying that if it's on the export list, you don't have to file anything with Eleni, which is not true. You just don't have to get 3 declinations. You still have to file the affidavits, the policy, and all the other related documentations. You just don't have to get the 3 declinations. And I couldn't believe it that a broker group was telling excess line brokers misinformation. I'm like, you got to be kidding me. And that was when I came from the insurance department. I just started at Eleni. I'm going, what's going on out there?
That's where fake news started. Fake news.
That's not fake news. Or alternate facts. Alternate facts.
Alternate facts. There you go.
So Eugene, how can we guide and help them, educate them? Where can we send them to get those on the export list? Because that's where we run into situations. I mean, because that's not our expertise.
Right. Either on the Eleni website, we have a list of what's on the export list. I know that on the right, Brian, you jump in on the actual
Part A
module. There's a button there that you click on, and it tells you what's on the export list.
Right. So in the past,
as long as they know it's on the export, they have to know it's on the export list in order for them to click on that export list button, and then it'll bring down the listing of all those coverages that are on the export list.
Yep. Yes. So
or else they can call Eleni, and we can help them out.
Yeah. And what we do though is to alleviate the problem where they're not picking an export list when they could have. We have a toggle key, coverage code or export list. If they say it's on the export list, we use the system to force them to pick the coverage code from the export list. So then both things are consistent, so we kind of help them guide them like that. They can always call us, and like Jean said, it's on the website. We always ask them, just call us. If you have a quick question, help us, email us. We will guide you through the right process. And more brokers have been doing that. Sometimes they're not even sure what coverage to pick. So we send us the deck page. You send us the deck page, we'll kick it up to Brandon or Teresa, or the powers that be, or Jean, and then they will decide, hey, this is the right coverage. So you're not having to do corrections and you get it right the first time.
Right. It's better to verify before you have any kind of questions. Verify it before you click on the appropriate button and say it is an export list when it might not be. So it's better to measure twice, cut once, as Dan Moore always tells us.
Joanne?
Little California perspective on the export list. So first off, the downside to getting declinations when your coverage is on the export list is that the purpose of the diligent effort is to find 3 companies that write the kind and class of insurance that you're trying to place. So if your coverage is on the export list, the state has already determined there are not 3 insurers.
Exactly.
So I'm going to tell you, as now having joined the stamping office, I am completely perplexed that that anyone would provide a diligent effort for those policies or transactions that are exportable to the market, because it really directly contradicts the whole purpose of the function. So
it's an exercise in futility.
It is, and it doesn't look good to me on how you reflect. So I was formerly a compliance officer for an agency prior to joining the SLA. You don't look good as an agency if you're getting declinations for coverages that don't require them.
Exactly.
Because it almost now seems like you're going to companies in error, right? So if I were the auditor, that's the stuff I'd be looking for. So as we educate our members, we're really stepping up in this coming year to provide some better education on those exportable coverages. Export list in California was just updated on May 28th. Unfortunately, this year they have actually removed one coverage and not added any new ones. So if you have not seen that bulletin already, I know we've sent it out to our members, but it's also available on the SLA website as well as on the CDI website. If you have products that you want to see get on the export list, please do reach out to us at the stamping office. You can reach out to my department, Education and Compliance, and then we can review that with you and get you in contact with other members of our team that really work at the regulatory end and work with the CDI to get these changes and make the recommendations to the list.
That is awesome, because that was exactly my next question.
Yeah.
If an agency or if someone has developed a new product not currently available, but it's not listed on any export list, what procedures would they need to follow? That's fantastic. Thank you, Joanne.
Yeah, no, and I think Jean pointed that out before. We need the brokers to testify.
Yep.
We can't simply, as a stamping office, go to the state and say, oh, make all these changes. So it's really, we really look for the brokers and again, are trying to do a better job in this coming year of reaching out in advance to those export list hearings to get our broker members involved and finding the right ways to push these products onto the list. This does save a lot of time when it is available.
The problem is getting the this information to the producing brokers who, unfortunately, we don't have, they're not our members. Our members are the excess line brokers. And if they're not pushing this information down, then the producing brokers won't get it. So that's where we have a problem.
Gotcha.
And I totally agree.
That was really valuable information that you shared, Joanne, that, as a regulator, what you're seeing is if you're just, if you're not going to that export list and you're submitting all of the diligent search, you're wondering what else is taking place that's not correct. So that's really important information for brokers to keep in mind.
And then I know that we also, and I don't want to take up too much time on it, but we also talked about independent procurement. And I'm just going to give you my 2 cents on independent procurement or direct placement. When you are on a, when you are a broker or hold any type of an agent's license, is that in the state of California, direct placement is only between the insured and the insurance carrier. So if you're a broker, independent procurement is not an option that's going to have a good outcome for you. You really need to make sure you hold your license and you renew that license timely. without a license, you can't place the business, and you also can't report as a direct placement because California law requires a broker to be involved.
And I think that's in every state because the NRRA, that's a requirement in the NRRA. So the NRRA, defines, that as no broker is involved in a independent procurement placement. So it's right in the federal law, which most, I guess, all states now have to comply with.
Gene, how do they handle taxes then?
You have to pay that. The insured has to pay that. In New York, it gets paid directly to the Department of Taxation, not to the insurance department, where the excess line premium tax gets paid to the insurance department. The other tax, the independent procurement tax, gets paid directly to the tax department.
Got it.
And that's the same in California. And again, the form needs to be submitted by the insured.
Now, just to get back to if your agency, there was a question about your agency has a new type of insurance coverage. How could they put that on the export list? In New York, you have to jump through many more hoops. Unless that new product fits into one of those categories, types or kinds of insurance in section 1113, you can't, you won't be able to even write it in the license market if it doesn't fit neatly. New York is strange. It has many more, loopholes that you have to jump through. So you got to be careful. If you have a new product that maybe you could write in California, you might not be able to write it in New York, and then you're going to get in trouble. So check with each stamping office or with the state insurance department in the particular state to make sure a new type of coverage can be written. In New York, a lot of times they'll have a new type of coverage, but they only want it to be written by the license market. And sometimes to write a new type of coverage that doesn't fit neatly into section 1113, they have to change the law. And that takes forever to go to the legislation and to get the law changed. It could take 3 years, 4 years, 6 years, an infinity. So New York is a little different. And so I'm not sure how, California might be different. It might be easier if you have a new type of coverage to go to the insurance department and have it put on the export list. New York is completely different. So I just wanted to let everybody know.
Yep, and that's where, again, I would agree, Gene, entirely. And I wouldn't say it's easier in California.
Okay.
I think that bringing a new product to market and writing it non-admitted while you're working on admitted rate and form filings is often a route that brokers will take. Mm-hmm. California, as well, is it's a longer process than we might like it to be. So I won't say it's very long, but it's longer than we want it to be.
Yes, definitely. Especially when you get the legislature involved. Then that takes forever.
It does.
Very quickly, thank you very much. That was some great information. We really got deep dive into that. I do have several questions that have popped up during this discussion that I'm going to have to present to you guys. But real quickly, Kay, if you're still with us, I've sent you a private message. If you could just answer that real quick, and then I'll present your question to the panel. Let me go to our Q&A. Ken has asked, do any states allow export based on a specific threshold of rating, say from the AM Best Guide?
New York doesn't.
In California, no.
No.
Okay, so it has nothing to do with that. Nothing to do with the rating. Okay.
The rating better be good.
Yeah. And next question, can a surplus lines carrier ever market directly to consumers, perhaps for export list policies?
No, not in New York. And you have to deal directly with the excess line broker is the one who's acts as the intermediary, and they're the ones that the insurance department will go after. They're the ones that it's regulated through the excess line broker. So in all excess line transactions, the insurance department doesn't regulate the excess line insurer. It regulates the transaction through the broker. So the broker is held responsible. So you always have to have an excess line broker in an excess line transaction.
Okay.
You can't market directly to an insured.
Okay.
Yep, and California follows the same, and that's where in that direct placement scenario, you would be talking about an insured leaving the state of California and all of those negotiations taking place, including the issuance of the policy outside of the state. Regulation requires all insurance to flow through the licensed broker who is regulated.
Okay. Another question. Many states use the language carriers who expect to insure your risk. How does an ineligible carrier fit into that? And then let me know if I need to repeat that question.
Could you repeat it?
Yes. Many states use the language, and we have quotes, carriers who you expect to insure your risk. How does an ineligible carrier fit into that?
Is that a standard carrier, an admitted carrier versus a non-admitted?
I mean,
Yeah,
I'm not sure,
what do you mean,
what
Joyce?
context does it
Yeah,
mean?
what do you mean by ineligible carrier? What would get some more specific there, because New York, that means something to us that that they can't be involved really.
All right. I'm asking them a question, and when they chime back in, we'll get back to that topic real quick.
Because in New York, an ineligible carrier is the one who ordinarily be a placement company, but they're not eligible for whatever reason. Or you're eligible meaning you've, are listed on the ILSA, you are able to write E&S business, or you are in the standard market and you're a declining company. So we want to make sure that because terminology is critical, we want to make sure what ineligible means to the 10 of us and what it means to the person asking the question, right?
Right.
All right, we have, I'm sorry, we've got so many different discussions going on here. So let me, Keith asked a question earlier while you were talking, and it was that, could we provide a link to Texas export list, which we told them Texas does not have an export list. Angie confirmed that while I was messaging him, and he did the same. He researched that and said, I agree that Texas does not have an export list. So, and this is a Texas question, so nobody here may be able to answer this. He says, so does this mean that all insurance risks in Texas should have a diligent search before coverage is awarded to the E&S market? Example, commercial property. I mean, if they don't have an export list, it seems like the answer to this question is yes, diligent search. Except
maybe if it's an ECP, if it's an, exempt commercial purchaser, that might be a way around that. But otherwise, it seems that, since there's no export list, you have to get whatever the required amount of declinations are.
Right. Do you, I mean, I know you're not Texas. Do you know if Texas recognizes exempt commercial purchaser? I don't think every state does, do they? Do they, Joanne?
I know
They definitely do.
It's
part of the NRA, right?
It's in the NRA.
Oh, okay.
Yeah, that's part of the NRA.
I'm assuming, but you know what happens when you assume that all insurance departments.
No, you're right. And I said earlier, all my knowledge is pre-NRA, so that's why you guys are the panelists. All right.
I'm going to send you a copy of the NRRA so you can study it tonight.
I don't think I can do that. I don't think I want to do that.
I need you to memorize every word of
it. Joyce, I'd like to make give Gene a moment to answer this, because we have this in New York, Gene. Sometimes the brokers are asking us if they can use an online company as declination, right? A website. You want to talk about that, Gene?
Oh, okay. In New York, unfortunately, they haven't recognized, the insurance department hasn't recognized, this is declinations from licensed companies. They haven't recognized computer-generated declinations, and a lot of companies are now going towards that. You key in certain information, and it'll say, no, according to this information, artificial intelligence, says, according to this information, we won't accept this risk. But the department still insists that you put the name of a person. We're still trying to get them to recognize, computer-generated declinations, but they still want you to put the name of an underwriter at the company. And I get brokers telling me, well, I didn't speak to anybody. Aren't you kind of forcing me to lie on this declination, which I have to swear to that I'm telling the truth? But unfortunately, and for whatever reason, the insurance department still has not recognized computer-generated declinations. So unfortunately, in New York, you have to put down the name of an underwriter at the company, even if you haven't spoken to that person.
And Joyce, we see more and more of that. So
Makes
that's
no
going to be
sense,
more.
but we're trying to convince the insurance department to get into like the 1950s, in the 1940s, but
Oh, gosh.
And for California, although we have not revised our diligent effort form since 2004, we do accept a website declination.
oh, that's great.
So there's a lot of other things we would like to see updated on a newer version of the diligent effort form, but we will accept a website declination. We will not or cannot accept an email declination.
Right.
Okay.
So you do have to provide the name and phone number of the declining person. So if you have an email from them, you would need to provide their phone number, not their email address.
Okay,
Modern technology.
I have a little bit more information on the earlier question, the question that says the states use the language carriers who expect you to insure your risk. They said someone made mention of uploading a carrier's underwriting criteria showing ineligibility of a risk sufficing as a declination. I'm asking if that practice conflicts with carriers that you expect to insure your risk.
Well, in New York, we have a listing, and it's on our website and on the insurance department's website of those companies, those licensed companies that are eligible to decline. So if that company that you're talking about isn't listed on that company of licensed New York excess line, licensed insurers, you can't use that. Is that what they're asking? I mean, if the name of the insurer is not on that list, which is either at the insurance department or on the Eleni website of licensed companies, you cannot use that company that might not be eligible in New York as a licensed company also. So I'm not sure if I'm answering the question.
That's okay. I'm communicating with them now. And when I hear back, I will let you know. And I've also let them know if we're not covering it, if we're not answering what they're asking us, or if we're misunderstanding the question, we'll go offline with them. I do have still some more discussion to get into real quick. Linda has asked Joanne, this is for you. She said that you mentioned the California export list was updated in May of this year. The one she's finding on the SLA website is still dated 2018.
It is actually in the process of being updated.
Okay.
And then I sent to you, Joyce, if you want to share it with everyone, the CDI's bulletin.
Okay.
It has the most up-to-date list.
Oh, awesome.
So you will see it on the SLA site, if not later today, within the next day or so.
And I think, did you see the other part of that question, Joanne? Will cyber be getting added?
Cyber is not, so we were not successful in getting new coverages added this year, which was unfortunate for us, and I think had a lot to do with the pandemic and some of the length of time and inability for the department to get through and get back to everyone in some type of a expedient fashion. I think the communications got a little slowed down. We have no new coverages being added this year.
Okay. All right. Richard has said, I don't think, and he maybe was trying to answer someone else. I don't think you could ask a health insurer to write a property risk. If the market is known for property, why would you ask them for a quote on auto, GL, and workers' comp?
Absolutely correct. You have to have reason to believe that the company would write, that specific type of coverage. And obviously a health insurance company is not going to write P&C coverages. Right. So you would not be able to do that. And it would make no sense.
Can't claim that as your declination.
Correct.
Yeah. Okay. Let's see. Here we go. Oh my goodness. They just keep coming in. All right. Are you ready?
Just the first 20 minutes.
In the case, and they're still coming in the case of an admitted policy, does a retail agent need to be licensed in the state that they're placing coverage if working through a wholesaler? This is good. This question's been asked before, and I think by the same person. I'm going to reread this. In the case of an admitted policy, does a retail agent need to be licensed in the state that they're placing coverage if working through a wholesaler? Now, I know that that's admitted.
Oh, admitted that.
And they do. If they're going to, if the retail agent is the agent working with the insured,
Mm-hmm.
I would tell you, I don't care what state they're in and what they're negotiating, they have to be licensed in the state that they're negotiating. You can't offer coverage if you don't hold a license.
Right. In New York, right, Gene, a PC agent license wouldn't work as a broker. You have to have a BR license, which is the producer broker license.
No, they're talking about admitted. That's
admitted,
that
okay.
answer is for, excess
Admitted,
line.
okay.
They were asking an admitted question. So
Got it.
It's a little different.
Okay. Whoo-wee, this is a long one. And California, this is for you. So here we go. So sorry, I missed the first 20 minutes. And if this was discussed, I can watch the replay. I don't think it was discussed. In California, for private flood, what would be a better solution on the SL2 than simply putting online decline from 3 carriers that you don't write the business, because clearly we aren't checking each time as we know they don't offer it? Assuming the private flood has better coverage than FEMA or NFIP, should we select another option than 3 declining admitted carriers? That was a long question. I'm sorry. Were you able to follow me on all of that?
That one's a tough one. And, the reality, and Gene brought it up before, is that the regulators are not up to date, right? We're not in the modern world all the time. And it's simply not permitted, right? You really need to look to 3 carriers every time you place, whether or not they're available, unless we can get that coverage onto the export list. But what I was wondering, Joyce, is if you shared the contact information for that question, that maybe I could reach out directly and see if we can't, maybe I'm misunderstanding something or need some additional information.
Okay.
Awesome. Guys, one of the things that we said was we were going to end at 4. However, if we have more questions, and I understand for the attendings, I understand if you have to go, you can catch the replay on our Spot on Insurance YouTube channel. But if you guys have time for a couple of more questions, we will try to answer as many as possible here, and then put it out there tomorrow. Joyce, take it away.
No problem.
I'm typing like a crazy person. Hang on. All right. I think I'm done with the questions in the chat, but I have some more over in Q&A. Let's just see. Another California question. Does California allow a client's signature to be dated after the policy effective date if the carrier allows the coverage to be backdated?
So if you could just, I'm looking for it in the chat. I don't see it.
Hang on, it's in Q&A. Let me see if I can.
Oh, and I can bring up Q&A.
Okay, if you would. So on the D1 affidavit, they're asking, does California allow the client's signature to be dated after the policy effective date if the carrier allows the coverage to be backdated?
So this is another tricky one that we are actually currently working on because backdated coverage has not been recognized, even though it's a real thing that occurs on a day-to-day basis. So it's actually something, since I've joined the SLA, that we've been looking at addressing. So once again, maybe if I can reach out to Effie directly, and then once we kind of have that solution, we can share that with you to share with everyone.
Great.
Joanne, you should have stayed in New York. You get all the hard questions.
I have to tell you, it's been a lot of hard questions in the couple of months I've been there. I'm like, wow, this is much harder than I thought. So, but it's bringing up some great issues, which is
there are great issues out there, and it always makes you think. And it's like, especially like you go, oh, it's a Monday morning. Do I have to think this hard on a Monday? Come on.
But this is why we put this together, because we think this could be so helpful. folks.
It's
Getting
very
it
helpful.
answered straight out.
Yes.
We must be doing something right. There are a lot of questions today.
Or
Aaron
else we're doing something wrong.
well, that could be the truth too. I hope not. Aaron and Effie, I've reached out to you both individually. Just please send me your email information and I will share that with Joanne and you can take those questions offline with her.
Welcome.
All right. Let's see if I can get back to, and I know that we kind of jumped the gun. We really didn't. I mean, it made sense to talk about it, independent procurement and ECP, but I do want to dive off into those just a little bit more before we're done. I know we're past our hour, so we'll keep this short and sweet, or maybe we just need to set up another webinar to be continued, more or less. What do y'all think? Ted and Arleen, you're running the show.
I think, since you've already covered ECP and independent procured insurance, I think we've covered it all. We've answered the questions that are on the Q&A. So I think we're good. If anyone has additional questions that they think of during the week, you're able to send those questions to ccquestions@ilsainc.com and we'll address those the next time around. We will be having another weekly compliance session next week. It'll be at our regular time, which will be on Thursdays at 3 p.m. Eastern. And what is our topic next week, Joyce? Do you remember?
Oh, newspaper publications after you've registered with the Secretary of State, where you would need to publish those registrations in the newspaper, or if you file a DBA in some states, you have to file in a newspaper publication. That's going to be fun.
Yeah, DBAs are always enlightening how involved they can be.
Very much so.
It's another thing that people don't pay attention to too much, DBAs, and it can get you into a lot of trouble. So I think we're good, guys. Thank you so much for having joined us. If anyone has any questions, just send them into ccquestions@ilsainc.com. If you need any help, feel free to join and call our team at ILSA in Texas. That's 254-729-8002.
And don't forget Spot on Insurance podcast because we are covering so many different areas of regulatory compliance, and we really are, I think we have our finger on the pulse of the insurance industry. At least we're trying to make sure we have it there.
After last week's session, I actually got like 2 emails from 2 attendees saying, we didn't even know you guys had a podcast. So yes, we do have a podcast. It's Spot on Insurance. We have many, many episodes that are centered around compliance. So check those out. And then we have a lot of episodes that are centered around everything that's going on in the insurance industry. So AI, drone technology, all that good stuff. And you'll get to learn a lot of stuff about me and Ted. So thank you so much, guys. And we look forward to seeing you next week on Thursday. Thank you to all of our panelists for being here and joining us. And just
Joanne, Eugene, Brian, thank you.
Right, thank you.
Welcome.
Thank you,
Renzo, thank you all
for having us. Yes. Take care, guys.
It's good seeing you, Joanne.
Yes, nice to see you. Have a great day.
We miss you.
Everybody, yeah, have a good one.
Okay, so long. Bye-bye.
Bye-bye.